AMC Entertainment Holdings Inc. dizzied investors Thursday by losing 40% of its market value, then regaining more than half of that, and pocketing more than $587 million in fresh cash by exploiting the frenzy. The stock's wild rally of 2021 initially collapsed Thursday when the company disclosed plans to sell more shares and use the money to cut its heavy debts. AMC went ahead with the sale anyway, ultimately collecting $587 million by midday, and any concern among investors that their holdings would be watered down faded after AMC said it completed the program. After briefly erasing all of their losses, the shares closed down 18% at $51.34. The decline continued in after-hours trading, with the stock falling as much as 11%. It's just another remarkable turn of events for the movie theater chain, which was staring at potential bankruptcy only a few months ago in the face of the COVID-19 pandemic and brutal competition from streaming services. Amid the mania for meme stocks, shareholders have brushed aside doubts about the wisdom of bidding up a company's stock by about 3,000% when its survival was so recently in doubt, and they reserved extra contempt for Wall Street professionals. As crazy as today's action might seem, it's a lot more normal than the action the stock has seen over the previous 7 trading days, said Matt Maley, chief strategist at Miller Tabak Co. After all, he said, it's not unusual to see a stock back off after such an outsized rally. Nothing that has taken place over the past 2 weeks should be considered normal, until today, he said. Analysts such as Chad Beynon at Macquarie aren't backing off from predictions of a bigger plunge to come. Based on what we've seen with other retail stocks, and given the paper profits from these retail investors, we would expect for shares to fade, Beynon said. Fundamentally, we still believe that AMC is worth $6. Credit investors, by contrast, pushed bond prices higher because even at the newly depressed price, the share sale was making a sizable dent in AMC's crushing pile of debt, which stands at about $5 billion. It would be irresponsible for the board and management to not do a raise to secure the balance sheet at these levels, said Greg Taylor, chief investment officer at Purpose Investments. CreditSights analysts Matt Zloto and Hunter Martin wrote that a successful offering would be a massive first step in deleveraging the AMC capital structure. The Thursday morning filing for the equity sale came just days after AMC collected $230.5 million by selling stock to Mudrick Capital Management. The investment firm then flipped those shares, selling for a profit as it told clients that AMC was overvalued. AMC warned investors flat out that they could see their stakes diluted and perhaps suffer heavy losses after the new offering, which was designed to be sold in the open market where retail traders thrive.